So crypto winter often has a chilling effect on investment, but every now and again we see green shoots. Token management platform Magna closed a $15 million seed round at a $70 million valuation led by venture capital firms Tiger Global and Tusk Venture Partners. Joining us now to discuss is Magna co-founder Bruno Faviero. Welcome to the studio, Bruno. Thanks for joining us.
Thank you. Happy to be here. Excited to be here.
All right. So I guess off the bat, how did you raise $15 million in VC funding during a crypto winter?
Yeah, it was a lot of effort to hold together.
Has it been in the works for a long time?
So we started the raise at the end of March and April. We found our lead at the end of April, and then the market crashed 2 weeks later. And so we had to do all of the follow through in the context of that. And so it was a lot of keeping people excited, keeping the momentum. But I think when you have a strong vision, you have a strong team, and you have a real company that has a path to doing real revenue, investors stand behind that as a business.
So there's still hope out there for some startups?
I would say actually what we're seeing now is the high quality companies that are rising up, thoughtful companies with real business models, with real revenue models. And I think those are the ones that are getting a lot of attention right now. That's what investors are looking for.
So tell me what Magna is all about.
We help crypto companies manage and distribute their tokens. So you need to get tokens out to your stakeholders, your employees, your team members, your advisors. You got to get it to them on a schedule, a distribution schedule. We help you automate that schedule. So whether it's monthly, quarterly, real time, we put that on autopilot so your stakeholders get their tokens on time and they get the right amount.
All right. I guess what are the... Oh, Lawrence, you want to go for it?
Yeah, in terms of what you were seeing in... when it comes to fundraising, did you notice a change in attitude even before the onset of crypto winter? Did you notice anything, in dealing with VCs that began to change and what they were asking for, how they were asking, and the kind of hoops you had to jump through?
Yeah, I mean... certainly before the crypto winter, when we were talking about the bull market, you could honestly raise a $4 or $5 million round at the back of the napkin business plan. Like the due diligence was not really being done. Rounds were getting done in days, sometimes even one day I'd see rounds getting done. And I think when the market started turning, investors really started lengthening the amount of time they were doing, the amount of diligence they were doing, and holding companies to a higher bar. I think holding companies to a higher bar, not just of performance, of business models, but a higher bar of ethics, a higher bar of what they do with the money, how they spend it, how they treat their team, and just generally filtering out a lot of people that I think were in it for the wrong reasons. And so I think that companies now, even with that higher bar, it takes a lot longer to raise a round these days than it used to.
Mm-hmm. Yeah, we hear that a lot, that crypto winter is actually like a really good time for a good startup to grow, and that the best startups are going to come out of a crypto winter. So, congratulations.
Yeah,
But,
if you look at Web2,
just about your overall model. If I understand it correctly, it's basically these projects sort of bringing in an outside party to kind of help them with token management. And I guess the question is this something that is kind of just like a phase, eventually? Because my understanding is that the communities are supposed to do this, right? This is the ideal of crypto, is that community, the so-called ecosystem, whatever that word means. They're supposed to distribute the tokens and figure out the best way for token allocation. So it seems like a slight aberration to actually have an outside party come in and help manage this process. So is this something that's just kind of a stage in what's ultimately going to be decentralized, or do you think that this kind of service will be here to stay?
Yeah, I think there's kind of an interesting difference there between what you're saying, right? Who's making the decisions, how are you deciding, maybe who gets the tokens, how much they get, when they get them, and the actual execution of that plan. What we're helping is with the execution of that plan. So when you decide, okay, now the community maybe has decided who gets how much when, now how do we actually automate that? When you, let's say, it's similar to payroll, right? When you decide, okay, Bruno's going to get paid, so many dollars per month, you automate that through a system that takes care of getting it done, putting it into the right account, maybe withholding the right amount. And so what we're talking about is building those rails, building that infrastructure that makes it easier for these companies to run, so they don't have to worry about, okay, how do we execute that plan? And they can focus on, the product, maybe they can focus on the tokenomics, they can actually focus on the brand, the community, everything else.
Were you saying that some of these founders are basically doing it themselves on a spreadsheet or something like that?
Yeah, and that's how the plans are getting tracked and executed. I would say the status quo, the best practice, is they look at a spreadsheet. That spreadsheet, 100 people have edited access to it, they're editing cells, there's no transparency, no accountability. That is the state of internal crypto operations, of internal infrastructure.
Oh. Emily, you had another question? Okay, sorry about that. I guess my other question was, is there any concern that these could be unregistered securities? And in that case, what would happen? Because we're seeing the SEC and Gary Gensler ramp up language that potentially that they have more jurisdiction, the United States has more jurisdiction over these, and that they could be unregistered securities.
Yeah, and we want to make sure that we're working with the regulators to really follow whatever guidelines they're setting. A lot of our companies in the U.S. that we're working with, I'd say, have really robust legal backing. They're really working on high utility tokens. 6 months ago, a year ago, that was not the case. There was a lot of people pretty frivolously launching tokens, but now we're seeing in this bear market pretty serious projects with high quality founders, high quality backers. And beyond that, a lot of our customers are international. So we work with a lot of customers in Singapore, in Southeast Asia, in Africa, even in Europe, that are using tokens in really novel ways. And if we can make it easier for them to do that, that actually helps them expand to these global markets that I think is the biggest benefit of crypto. It's a truly global ecosystem.
And are you seeing more interest from startups or institutional?
So we actually, we serve both. So we have a company product that helps companies distribute tokens. We actually also have an institutional product to help institutions manage their holdings, their investments, the tokens that are coming into their custodied wallets. We aren't talking about that quite yet, where it's a little stealth, but we are seeing a lot more inflows of both institutional investors, but also traditional companies that are exploring interesting ways to leverage tokens for their business model.